In today's video, I'm going to be having a look at what's going on in Asia right now with coronavirus. We're also going to take a quick peek at the Japanese economy and what their forecasts are. From there, we're going to be looking at the big four banks in Australia and what they are seeing in the markets at the moment. From there, we're going to have a quick look at the New York Stock Exchange opening back up, and as well, we're going to have a look at last night's US jobless claims. Hello and welcome to another acysecurities market update. My name is Alistair Schultz and I'll be your host through today's trading journey. The first thing I always like to do is give you a bit of an update on coronavirus. Currently, we have 4.4 million infections globally. We've had more than 300,000 deaths now, and we're nearing 1.6 million recovered patients so far. Naturally, this is going to continue, but we do have a threat of second waves occurring already. In Asia, we've got more than a number of cases where they can't find the locally sourced transmission case. We've had a couple of people that are in China that have had issues with this, where the asymptomatic people have traveled around and gotten people infected, and then that has turned into another cluster. It's not just in China though, it's also in South Korea. We've also seen it in places in India and a variety of other Asian nations that are struggling to sort of contain after coming out of lockdown or starting to ease restrictions. So the cases for a second wave are quite high, and the issues of it are obviously going to be predicament to look at in the future. Now, the next pieces of stuff to look at today is what's going on with the Japanese economy. So far, they've forecasted that it's going to shrink by 4.5% over the last 3 months. But now we've seen that there's an expectation that it could actually fall on GDP levels by 21.5% on a year-over-year basis. Now, they are very big numbers. And so far, Shinzo Abe and the rest of the Japanese government are looking at ways to try and fix this scenario and get the economy running again by easing restrictions in some places. However, obviously, we've just seen some Asian countries having second waves start off with little clusters here and there, and they don't want to push that sort of situation to occur because it could very quickly spiral out of control. The issue that we're seeing mostly is that asymptomatic transference of coronavirus is the biggest problem. They can't track or manage who actually has it, and you never know where it's going to pop up. So in some of the instances that we've seen so far, the local cases of coronavirus that have appeared in the last couple of weeks have actually been transmitted by an asymptomatic person with no known origin as to where it's come along the chain. So hopefully we don't have the same sort of effects around the rest of the world, but those chances are pretty unlikely in my opinion. Now, moving on, the big four banks in Australia have noted that it is the weakest outlook for the Australian economy since the 1930s, indicating that they are looking at some Great Depression levels of unemployment and of course GDP figures to match that. The added tensions that we're seeing between Australia and China are not helping the situation either, and so we're likely to see this move a little bit darker in the coming years. But what they have also noted is about the Australian housing prices. We've known for a long time that Australian housing prices have been on the up and up forever. It has been a solid investment for those people that were able to get in the early stages. But now the forecast is looking pretty grim. They're saying that the NAB are expecting between 11 and a 32% drop in housing prices just in Sydney alone. We've got the NAB looking at the same sort of thing at about the 20% mark. So if we are to sort of take the piece and parcel between the two, then we'd have to put somewhere in the middle and estimate that it's somewhere in the 20 to 25% range for a housing price drop. Now, if that is accurate, then it means that there are going to be a lot of investors out there who have invested in property that are going to get caught with their pants down, so to speak. Hopefully it's not the case, but the chances are likely that with all of this stuff going on right now and the economic scale of problems, that it's just going to be another victim along the way. Now, the next thing to sort of talk to you all about today is about the New York Stock Exchange. They haven't actually had the trading floor open since New York was locked down. They're now talking about reopening it in small components, meaning that traders are going to have to go in there with face masks, they're going to have to respect social distancing measures, and everyone is going to have to be temperature checked on their way in to make sure they don't have any fevers or obviously a high temperature. So what is this going to look like? May 26 is the supposed date. And we're not sure how it's really going to look because it means that a lot of people are going to have to get on the trains. And obviously New York has had one of the highest infection rates in the US, as well as the highest number of deaths in the US. So we will have to keep an eye on that situation. Naturally, if we do get coronavirus in the New York Stock Exchange, it's not going to be good for markets. So let's keep an eye on what happens there. It's definitely going to be interesting to watch. May 26th, keep it in your calendar to have a look and see how they travel. Now, the next one that I have for you today to have a look at is on the US jobless claims. There was another 2.9 million people who applied for unemployment benefits. These are obviously massive numbers. And when you look at the past couple of weeks that we've had, they've all been in the millions, but this is the lowest of the lot. So perhaps that's indicating that we are having less people apply because the workforce is starting to build back up. Having said that, I do expect that we are likely to keep seeing more numbers in the millions mark over the next coming weeks. We also have to sort of take into consideration that there is a potential here that a lot of people have to apply on a weekly basis. So they could be sort of artificially inflating the numbers. But regardless, it is still a lot of people without work. The number last week at total was about 33 million. So we're now looking at nearly 36. This is obviously going to be problematic for the US economy to a certain degree on what's going to happen with their labour market, especially now that they're looking to reopen the economy. Chances are a lot of these people aren't going to be able to go back to their original jobs, and the unemployment rate is going to set to rise even further. Keeping in mind as well on this, Steve Mnuchin said that he thought the real unemployment rate was around 25%. When the actual figure that's come out is 14.7%. So there is a discrepancy there on what the real side of things are versus what we see in the actual data figures. So we need to keep an open mind about that and think about it proactively. Now, the last one that I've got for you to sort of show today is the news that's ahead. We have German GDP coming out tonight. We also have US core retail sales, and we have the standard US retail sales. So they will be interesting to have a look at, see how the market is sort of picking up on the GDP side in Germany, but also to see what's going on with the sales on the consumer foot down in the US. So hopefully that sort of helped you all today. If you have any questions, feel free to shoot me an email at talktoal@acy.com. And of course, don't forget to like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.